Another one of the most hated stocks of 2023 seems to be Estee Lauder. Estee Lauder is down 39% year to date and down 60% from its highs in January of 2022. So can this fallen angel rebound to its former glory, or is it game over for Estee Lauder? Let's find out in this video. So Estee Lauder's stock chart looks pretty ugly. This year is down 39% while the whole market is up. And if you take a look at the longer time frame, you can see that ever since the peak in January 2022, Estee Lauder is down 60% from its peak. So what's going on with this stock? So usually Estee Lauder is a company where their revenue and free cash flow normally grows at huge double digits, much higher than its competitor, L'Oreal. At the same time, Estee Lauder usually has very predictable sales and profits. I mean, women, and nowadays men, no matter what, they always need skincare, they need perfume, they need cosmetics, right? So what's happening? What's going on with the business? Let's take a look at the financials. So we're at gurufocus.com, and let's take a look at its revenue, profits, and free cash flow. So the first thing you will notice is that its revenue, historically has been growing at huge double digits, much faster than L'Oreal, which actually is a much bigger company. Estee Lauder is the second biggest company, but with much higher growth rates. Now, in comparison, also Estee Lauder's products tend to be at higher price points compared to L'Oreal, where about 50% of their products are mass market products. Okay, so again, revenue has been growing very consistently in the last 15 years. Now, in fact, revenue has actually only come down slightly in the last 12 months. You can see slight dip in revenue, which is not a big deal because you can see historically revenue has dipped before going higher, revenue dipped before going higher. So that's not really a big deal. And do bear in mind also that Estee Lauder, its products are moderately cyclical. So it is affected by the economy. So in a recession, people may scale down and buy cheaper makeup, cheaper skincare products. So they are affected by inflation and the economy as well. So given high inflation recently, a bit of a slowdown in revenue is not a big deal, okay? But what is the big deal is you can see their profit had a big drop in the last 12 months. Now again, you can see historically the green bar, the net profits have been increasing consistently, although again it's a bit moderately cyclical. It does go a bit through ups and downs over the years, all right? Slight dip there, but again, pretty big dip in the last 12 months. So what is going on with this? Let's again find out in a short while. Next would be if you take a look at its free cash flow. So again, free cash flow in blue has been pretty consistent over the years, right? Again, it does dip once in a while because of its moderate cyclicality. But some of you would notice what happened the last 12 months, the free cash flow turned negative. Now, don't worry about this. This is actually a bit of an error, in my opinion, in the way Guru Focus calculates a free cash flow, okay? So usually free cash flow is cash flow from operations minus capital expenditures, okay? But in this case, Guru Focus, they not only deducted the capex, but they also deducted the $2.28 billion that was in the acquisition of the Tom Ford brand. So by right, when you calculate free cash flow, you should just deduct the maintenance capex. So if you add back 2.28 billion to the free cash flow over here, it should not be negative. It shouldn't be negative. In fact, if you look at other websites like Capital IQ and Yahoo Finance, the free cash flow, in fact, is positive in the last 12 months. So this is, in my opinion, a bit of error in the way they present the data, right? So actually free cash flow is positive for the last 12 months, although much lower as well, about 700 million in free cash flow. So that again is concerning. So why the drop in profits? Why the drop in free cash flow? Let's find out. Now again, generally we want to invest in companies that have got consistent growth in revenue, profits, and free cash flow. So if a company has a sudden big drop in profits and free cash flow, then you could ask yourself this question: is this a temporary short-term issue that can be resolved eventually? So if you can, hey, that could be a great opportunity to buy shares when it's hated by the market, and then you can make a lot once it rebounds. But if it's a long-term permanent issue, there's something wrong with the company, they have a deterioration in the economic mode, or the industry is in a sunset industry, then it's a best decision to sell the stock or not to buy the stock. So the first question is this an industry issue? Are women and men now saying, I don't need makeup anymore, I don't need skincare, I don't need perfume? No, right? They still need it, right? To a lot of people, it's an essential item. So in fact, if you take a look at L'Oreal has still been growing very well in the last 12 months. So it's not an industry issue, okay? It's more of a company-specific issue. Then you got to ask, what is wrong with this company right now? Is it a, again, a temporary issue or a permanent issue? Permanent issue is that when people no longer desire their products, right? They've lost their brand equity. So is that the case? I don't think so, right? They still have an extremely strong portfolio of brands that people desire very strongly, that has pricing power. Now, before I explain and you can understand the core issues facing Estee Lauder right now, let's better understand its business model, okay? So Estee Lauder is a global market leader in selling beauty products across 25 brands across 150 countries. So their biggest product would be skincare, followed by makeup, fragrance, and hair care. Their portfolio of brands is either number 1 or number 2 in the prestige beauty market in many countries, including the US, China, and a big part of Europe, Middle East, and Africa. Now again, like I said, Estee Lauder's products tend to be at higher price points as compared to its closest competitor, L'Oreal. But even then, if you take a look at their portfolio of brands that are generally more expensive, but they are also at different price points, from the very expensive to the mid-tier to the slightly more affordable. So at the premium price range, they have got brands like La Mer, Kilian, as well as Tom Ford Beauty. And then slightly lower, Jo Malone, Bobbi Brown, Bumble and Bumble, Estee Lauder itself. And then at the mid-tier, they have got Michael Kors, they got DKNY, they got Donna Karan New York. And then at the lower price points, they've got Clinique, they have got Tommy Hilfiger, they have got MAC, they've got Aramis. Now, the good news is that Estee Lauder's recent problems only come from a very small part of the entire business. So it can be resolved pretty easily, in my opinion. So what part? Well, let's take a look at this. So you can see that their revenue comes from the various geographical regions. Roughly about 26% of their business comes from the US and Canada. So that part of the business, there's not much issues. It is still growing, although it's been pretty flattish year on year because of very high inflation recently, okay? And then you've got 34% of their business coming from mainland China itself, which actually has been growing very strongly in the last quarter. So that's not really the issue. Now, the main issue actually comes from this part of the business. So this part of the business, it's under EMEA, Europe, Middle East, and Africa. Now, what is really weird is that Europe itself, Middle East, and Africa, they are doing well. They've had double-digit growth in the last quarter, in fact. But the funny thing is that this company, under the EMEA entity, they park a particular part of their business known as global travel retail. Now, what is global travel retail? Now, if you guys have gone traveling to airports, especially, you see those duty-free shops, and you can see those Estee Lauder products there, that's their global retail distribution channel, okay? Now, for some strange reason, their entire global travel retail business, duty-free shops, they park it under EMEA, which is really very weird, but that's how they do it, right? And within this global travel retail, one part of it is having the biggest problem, which is the Asian travel retail, specifically 2 places only, Hainan, China, and South Korea. Now you may say, what has Hainan and South Korea got to do with Europe, Middle East, and Africa, right? Yeah, I asked that same question, but after I checked with some people who work for Estee Lauder, who are my students, they said, yep, we group them under EMEA. So their main problem, I'm going to explain in a while, their main problem that's dragging down their sales and profits is Asian travel retail. That is the main issue that they are facing. The rest of the business, no worries, actually doing pretty well. Now the challenge is that their Asian travel retail, that makes up a big part of their global travel retail, is now their biggest distribution channel, 28%. So this is where all their problems lie right now. And again, I'll explain more in detail why is that a problem, right? Now, their direct-to-consumer business is where they sell direct to the consumers through websites, through their own website or through third-party websites. Now, that is doing very well. In fact, last quarter, they had a huge double-digit gain in direct-to-consumer sales in China as well. So, for example, you can see that Estee Lauder is ranked number 1 for in-store live streaming prestige beauty on both Tianmao and Douyin. Now, Tianmao is owned by Alibaba, Alibaba's online e-commerce platform, and Douyin is basically TikTok. That's right. In China, TikTok is called Douyin, right? And Estee Lauder's online business in mainland China, fourth quarter, generated over 60% in organic sales growth, 60% growth in China, right? So like I said, this online business of theirs is relatively new and is growing very, very strongly, yeah? And in fact, one of the things, the good things is that this will help to make up for the decline in the travel retail business in the near future. Talk about that more in a while, right? Now, department stores make up 22% of their business. That's doing okay, not fantastic, but okay, still growing, right? Mass retailers, they also sell through mass retailers like department stores and Ulta Beauty and Sephora. That's 17% of their business, and the others will be 10% of their business, okay? So once again, their core issue is that in the last 12 months especially, they've seen a huge decline in their travel retail business that makes up 28% of their revenue channels. So this very big 36% decline in their global travel retail business, which is mainly from their Asian travel retail business, is because of two reasons. The first reason is because the Chinese have not been traveling as much, and global Chinese tourism has not rebounded as fast as people expected. So historically, the Chinese, they travel a lot, right? They travel outbound out of China and they travel within China. So whenever the Chinese travel around, they go to airports. And when they go to airports, they purchase Estee Lauder products. So that helps, or that has fueled the growth in the Asia travel retail business, okay? But what happened, especially in the last couple of months, is number one, weak economic growth is causing a lot of Chinese to hold back on their traveling. So they are not going out to travel yet, okay? Number two, there's been a lot of restrictions on group travel in China, where the authorities are preventing the Chinese to travel in tour groups, which they used to do in the past. They can only travel like individually or in small groups. So all this has pulled down the Asia retail travel sales. So the question is this a permanent issue? Or is this a temporary issue? Well, I think it's a very temporary issue. In fact, now Chinese are beginning to slowly go out and travel again. In fact, they did a recent survey, which I'll mention later on, and now more and more Chinese have indicated that they are starting to travel again. And the Chinese authorities have also, last month, removed the restriction for large group travel. So that should ignite more traveling among the Chinese, and that should boost the Asian travel retail. Now, that's one part of it. The biggest part of their Asian travel retail business is actually coming from what is called 代购 activities. Now, 代购 is a Chinese word meaning to buy goods from one country and resell them in another country. So, in the last few years, this has actually fueled Estee Lauder's growth, but it's actually not very good. So, this has been actually cracked down upon by the Chinese authorities, and Estee Lauder themselves have been wanting to stop this practice because short term it boosts Estee Lauder's sales, but long run it hurts the brand and it creates a lot of cannibalization. So let me explain what this whole 代购 means. Okay, it's pretty interesting when you learn about this. So what you have to understand is that this example is mainland China. Please forgive me for my very bad drawing, okay? So, okay, let's say this is China. Now, at the south of China, there's a small island called Hainan, okay? This is the island of Hainan, okay? Now, what's interesting is that in Hainan, the duty-free shops, they sell luxury goods like Estee Lauder and stuff like that, tax-free at a very low price, okay? Much cheaper than in mainland China. So what a lot of Taikao agents do is that they go to Hainan and they buy in bulk millions and millions of dollars of luxury goods, millions of dollars of Estee Lauder products, tax-free, and then they go to China and they resell it to the Chinese. Why would the Chinese buy it? Because they can buy it cheaper than in the stores in China, than the online in China. So like I said, historically, this has helped their Asia travel retail business because they go to Hainan and they buy all these products, right? But it actually hurts their sales in China. It actually cannibalizes their sales and it reduces the brand equity, okay? So because of that, the Chinese authorities have been cracking down on this activity, stopping people from going to Hainan and buying these goods in bulk. So by stopping them, what happened? That's right, the sales dropped significantly in the Hainan duty-free shops. Now, this is also done in South Korea. So the Chinese, they travel to South Korea, they buy these goods in bulk, tax-free in South Korea, and they bring it to China and resell it, okay? So again, all this is being stopped by the authorities. Now, Estee Lauder themselves doesn't like this practice. So they have also been taking steps to stop it. So by stopping it, what happened? Short term, the Asia travel retail business suffers, okay? But long term is actually good for the business because the people in China will then find, hey, we can't get all these cheap goods anymore. So then they are forced to buy from the Chinese stores more, buy online, and then the sales will then re-accelerate through these other channels. Okay, so generally that's what's happening, okay? So that's the issue. That's the core issue that's happening, okay? Now, the other core issue is their profit margins have dropped, okay? So as you guys know, their sales has dropped a bit, which is not really an issue. But what's an issue is that their profit margins have dropped a lot, causing a big drop in their profits recently. So what causes drop in their profits? Is because recently, Estee Lauder, they had a short-term increase in their strategic investments. They spend a lot in manufacturing, R&D, and information technology solutions to expand their online business, which is doing very well, and to support their expanding global supply chains. So by spending a lot on all these things, short-term, what happens? It increases their expenses, reduces their profit margins, and kills their profits. And that's why their profits have dropped so much in the last 12 months. So again, the question you can ask is this a permanent issue? Or is this a temporary issue? Well, to me, it's a temporary issue, and it's not really a bad thing. It's a good thing because it will lead to higher innovation and productivity and sales in the near future. And again, this crackdown on the Taikao activities, again, is it a bad thing? Well, short term is bad because it hits their sales in the duty-free shops, but in the mid to long term, it's good for the brand, and these people who bought them cheap in China will have to buy it anyway from a new channel that will give Estee Lauder higher margins. So like I said, their main problems are only coming from this one small part of the business. And if you exclude this Asia travel retail segment, the overall Estee Lauder businesses, besides this segment, actually showed 5% organic growth year on year for the last quarter and 17% growth quarter on quarter. That means quarter 4 versus quarter 3, which is a very good acceleration. Now, if you dig into their latest earnings report, you can see that they are saying exactly what I said because I read the report and I summarized the whole report for you guys. Okay, but if you want to read the report, go read the report. So again, it says over here that, yep, their global travel retail net sales decreased double digits, which is 16%. And they, again, for some strange reason, they park it under the EMEA segment, all right? And it says over here that the reason is because of lower product shipments, primarily to retailers in Hainan and Korea, where the taikao buys in bulk and resell to China. Those bastards, okay? Now, if you exclude that, you can see that travel retail net sales grew strong double digits in in Europe, in Middle East and Africa, and the Americas, because they benefited from the increase in domestic and international travel compared to the prior year. So you can see besides these two, the rest have been growing, okay? The increase in net sales from developed markets was driven by the US, France, Germany, Spain, Italy, all benefiting from increases across all product categories. Net sales also increased double digits in nearly all the emerging markets in the region, led by India. So again, excluding their travel retail business that's been distorted by the taikao, net sales in both makeup and fragrance rose double digits in the region, benefiting from our strategic investments in advertising and promotional activities and the re-establishment of services in our stores. All right. Now, for their Asia Pacific business, it's doing relatively well, right? So net sales in Asia Pacific increased 4%, with growth increasing 36% in the fiscal 2023 fourth quarter from the third quarter, right? So third quarter to fourth quarter, 36% growth. So this reflects double-digit growth in most markets and increases in every product category, from makeup to skincare to perfume to hair care. So growth in Asia Pacific was led by Hong Kong, Macau, mainland China, Australia, and Japan. And like I said earlier on, in mainland China itself, their online business realized 30% organic growth and achieved approximately 60% penetration of sales in the quarter. So can Estee Lauder see a rebound in their profits and the revenue and their cash flow in the next 12 months? Yes, if management can execute on two areas. Number one, there must be a rebound in the Asia travel retail channel. All right. So like I said, the good news is that a recent survey of Chinese consumers suggests that 52% of Chinese adults are interested in traveling abroad this year, versus only 28% that said yes at the same point back in 2022. Also, recently, a month ago, there's been a recent lifting of restrictions for group outbound travel in China. So all this should stimulate more traveling and hence a rebound in Asia travel retail business. Now, remember that the crackdown in the taikao sales has hurt Estee Lauder in the short term, but continued growth in online direct consumer sales to China, as well as the rest of the world, should offset and exceed the drop in the taikao sales in the near future. And overall, this will be very positive for the brand and profit margins in the longer term. Now, the second thing that management is very much focused on is to re-expand their profit margins that have dropped in the last 12 months. So Estee Lauder, again, they are selling a prestigious portfolio of brands. So they do have pricing power. So as they leverage on their pricing power to raise prices with inflation, and they improve operational efficiencies and reduce their excess inventories, this should expand their profit margins. So this was from their earnings conference call. Let me just read it for you guys. This is from the CEO. He says, "We plan to expand our gross margins through continuing to leverage our prestige pricing power, inclusive of driving additional accretive, compelling innovation and improvements in operational efficiencies, including enhanced supply-demand planning, inventory optimization to reduce excess inventory and discounts. We will begin to leverage the further regionalization of manufacturing and distribution network in Asia to create greater inventory agility as demand fluctuates." Okay? We expect to recapture lost operating margin at an accelerated pace by delivering annual margin expansion that is faster than our pre-pandemic historical average, and we should be able to see signs of this in the first quarter of 2024. So this should happen within the next 6 months. We should see a rebound in their sales and profitability. Now, could things screw up in the execution? Of course. And if, for example, for some reason the global economy goes into a recession, that would definitely slow down the rebound in their revenue and profits, given the fact that these luxury items are discretionary and they are sensitive to inflation and the economy. But the good news is that for me, it's not a question of whether Estee Lauder's sales and profits will rebound. It will. It's not a question of if, it's a question of when. So will it be sooner or later? That I can't predict. And the good news is that if it doesn't rebound in the next 6 months because of a recession or some slowdown in China, it will rebound eventually, because ultimately Estee Lauder, they still have a wide economic moat. They have got a portfolio of very strong brands that will continue to grow in all these different markets. So is the stock price cheap at this level? What's the intrinsic value? So this is the intrinsic value calculator that we use. And again, you can get this calculator and you can learn how to value companies from our value momentum investing course that you can enroll at piranhaprofits.com or take our live Wealth Academy Investor Masterclass. And again, we also have the UIP, the Ultimate Investors Playbook subscription, where I do all the research for my subscribers. I do all the valuations, as well as students get to see my live buy and sell alerts every day. And you can check out Insight at piranhaprofits.com to enroll in UIP. So using this intrinsic value calculator, what I've done is I've normalized their operational cash flow. See, the challenge is when you value a business that recently had a drop in their cash flow, you can't take the most recent cash flow because it's a short-term problem they're going to turn around. So what I do is I will normalize the cash flow by taking an average of the last 3 to 5 years. So taking the average cash from operations for the last 3 years, that's about $2.8 billion. Now, sometimes I take free cash flow, sometimes I take operational cash flow, depending on the level of maintenance capex the business has. So every business is slightly different, all right? Estee Lauder has $8.2 billion in debt. It's got $4 billion in cash and short-term investments. What growth rate do I use? So looking at the different analyst consensus reports, you can see that if you look at Finviz, they've got a projected growth rate of 24% for Estee Lauder. If you go to Zacks, it's about 11.35%. Guru Focus, 15.42%. So which growth rate do I take? Now, if I want to be conservative, I take the lower growth rate of 11.35% from Zacks.com with a 4% terminal growth rate. That gives me an intrinsic value of $209 per share. So last closing share price yesterday was $156. So even at this conservative valuation, I'm getting a 25% discount to fair value, right? Now, if I want to be a bit more optimistic, if I take the 15% growth from Guru Focus, 15.42% for the first 5 years, and then it then slows to 11%. If I take that, that gives me an intrinsic value of $249. So it's always good to have a range of valuation, right? Conservative to base case. So basically my range is 209 to 249 valuation. So at the current price of 156, we do have a margin of safety in this stock right now. So if you take a look at the charts, you can see that Estee Lauder is still very much on a downtrend. The 50 moving average is below the 150 moving average and below the 200-day moving average. Moving averages are sloping down, so it's on a downtrend. And some people say, I want to buy it only when it's on an uptrend. And you can wait for the uptrend, right? Wait for the 50 moving average in blue to cross back above the 150 moving average in green. Wait for the moving averages to start sloping up, or wait for the price to get back above the 200-day moving average. Wait for that to slope up to start building a position. But the problem with that is that by the time it gets to an uptrend and you start to buy, you would probably be buying somewhere at about $200 to $210, right? Which means you're buying it near the fair value or below the conservative fair value. Now, if you want to be a bit more aggressive or you want to just look at the fundamentals, yeah, it could be like Warren Buffett and just buy now. But you can never pick the bottom. So it's always good to do a dollar cost average, right? So you just buy in 3 to 4 tranches. Or you could also look for a reversal pattern where you buy even before the confirmed uptrend. You buy once you see a reversal pattern from the price action. So what you could do is if you take a look at the weekly candles, you can see where are the potential levels of support. And you can see that this was a level of support that it attempted. Let me just zoom in a bit, right? So you can see this was a support level where it attempted to reverse, but then that failed, right? So now it's at a second level of support, and there's a third level of support at the COVID lows at 136. Now, we can never pick the absolute bottom of anything because anything could happen. We could have a recession, we could have China doing some stupid shit, we don't know, right? We can only just look at price action and wait for reversal patterns. So you can see last week, Estee Lauder made a pin bar, right? We call that a bullish pin bar, even though it closed red, but it's still called a bullish pin bar. Now, if this week, the candle can close back above this swing low pattern or this swing low at 158, if it can close back above with a strong bullish candle, this may signal a reversal. So this could be a great time to get in to catch that reversal, right? But if it can't close back above 158 by this week, then could it retest the COVID lows? That's also a possibility. So I'm watching these levels very, very carefully, right? So again, if I get a strong bullish candle closing back above 158, that could be a sign to add more to the position. If it doesn't, I could wait for the next swing low over here and wait for reversal of 136. So these are all the different ways that you could enter a position. Hope you enjoyed this video. Subscribe, and I'll see you guys in the next video. May the markets be with you. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.